I'm going to kick off this panel in just a minute. I'm going to take a seat. But this is really, the question is, how do we scale? How do we get that kind of trade going? We've got Gagan, who runs a large commodities trading group that is active across Africa. We've got Mary Jean, who works for the World Bank IFC and is investing and trying to solve some of these problems. And we've got Amy, who is involved in a large sort of port and logistics infrastructure in Nigeria. So let me take a seat. Gagan, I'm going to start off with you because, as I say, we know the kind of headline, which is that African countries aren't trading enough with each other. Any of us and many people in this room will know, when you cross borders, that's the non-tariff barriers, tariff barriers, all kinds of sort of logistical difficulties. But before we even get into that, the question that I kind of puzzles me, and I still don't have a clear answer, is how much of this is just about the kind of mix of goods and products? Cote d'Ivoire, Ghana, they're both great kind of cocoa producers, but you're not going to sell cocoa to buy cocoa. So how much of this is a problem of just kind of like hard logistical infrastructure stuff, and how much of it is product mix? Let's start with you.
Sure. Probably what I'll do is I'll start with announcing a good thing that I did this morning. So I actually created a website just for this group to trade for Rolls-Royce. So this group can trade their Rolls-Royce, if they own. And that's the website I created. So
you're saying it's a private eBay for Rolls-Royce
yes.
only? Okay,
I wanted to ask how many of you own Rolls-Royce? So exactly the question he's asked me something like that. He's asking why Africa is not trading within itself. I think the question that we have to ask, what is that Africa is producing that can be traded within itself? Because a lot of times, we talk about tariff barriers, we talk about logistics issues, but I think also somewhere, fundamentally, I think there are three issues. One, that we have not industrialized enough, or we are not producing good enough to trade among each other. So look at this. I think the closest city in China, Hong Kong, is about 5,170 kilometers from Djibouti. But they trade a little bit more. They trade about $300 billion with Africa, with the same trade barriers, with the same currency issues, with same issues that any other intra-Africa trade has. But they still trade much more. Why Africa is not trading within itself? I think fundamentally one thing is also that industry is not producing itself. So there's no high-value goods that are being produced to trade, and therefore you see the absolute amount of trade being low. I think second issue really, which fundamentally we see on a day-to-day basis, is really the infrastructure that does not allow the industry in Africa to be competitive. Now I'll give our example. We produce palm oil in Gabon. And we have Cameroon, which is, about 2.5 hours journey. And if you were to ship it by containers, it'll cost more than if you were to bring it from Malaysia. So how can Africa trade with itself? The logistics cost is such. I think thirdly, very important, is also, we talked about infrastructure and we talked about it. Somewhere there's also lack of real capital for such projects. So while, all the development institutions, all the banks are there, but when it comes to taking really, really difficult calls, the amount of checklists, the amount of ticks they'll ask you to fund a project, you need probably 2 pairs of shoes, before you can actually get financing for such projects. I think these three things, which makes it difficult for trade to happen within Africa.
Mary Jane, let's move on to you. In this broad question again of kind of, is it product mix, is it sort of hard infrastructure and kind of finance and some of the other issues that Gagan has raised, how do you kind of rate? What is the bigger issue? So I'm asking you, yeah.
Thanks a lot, Jonathan. So I think it goes beyond product mix, and I think it goes beyond what my colleague mentioned in terms of our investment requirements if you're talking about IFC. I think as a starting point, we probably need to look at the business enabling environment in each of these countries that would then support the rationale for regional integration. And what does that mean? If it's importing inputs for fertilizers so we can grow food and then trade that across several countries in the region, how do we reduce the amount of time, goods are stuck at the ports? How do we improve the storage facility or warehousing facilities at ports for both export and imports? And from there on, how do you improve the logistics from the port to its final destination? And there, I think, beyond just relying on governments only, how can we then also rely on PPPs and involve the private sector in that role? So I think we need to get those initial building blocks in place that would then subsequently encourage further and greater regional integration.
And Mary, I'm going to push you, and then I'm going to put a similar question to Amy. But when you talk about kind of, governments have to sort of get their side of things right. My question is, are the incentives aligned? Do governments want to do this, or are governments ultimately, kind of captured by some of the big sort of lobbies, some of the big interest groups at home that say, actually, we don't really want to do much more regional trade. Frankly, we quite happy collecting rents on local monopolies.
Not all governments share that view. I think some of them really share the view that working together, creating larger markets, we can do much better as a group of countries as opposed to individual countries. I think earlier this morning we heard the president of Ghana talk about, cocoa being not just for Ghana, but to, harmonize the cocoa sector with Cote d'Ivoire and why that makes business sense. So I think when we've got leading examples of countries like that willing to do that and focus on regional trade, I think that's a very good starting point. And they'll provide examples to countries or governments who are not willing to do that.
Mm. I mean, Amy, you're kind of doing business in the regional heavyweight. Is that, firstly, where do you see these kind of two big priorities, and secondly, how amenable is your government to opening up?
Okay, so I'm from Nigeria, and we haven't signed the agreement yet, so I think that's what Jonathan's alluding to. So, firstly, I'd like to take a step back. For me, what we need to focus on as Africans is creating African prosperity. There is no country in the world that has created prosperity for itself and its citizens without having some sort of barrier to protect itself from the outside world while they were developing local content. So firstly, to the extent that these trade agreements enable African countries to develop local content, I think that's a good thing. Now, I don't work for the government of Nigeria. I don't know why they didn't sign, but it could be that Nigeria is a big country. We have a huge domestic market that is significantly underserved by our domestic capacity, and there's a huge drive right now to increase that domestic capacity. I also think we need to recognize the danger that by having a free trade area within Africa without first increasing local capacity, you could end up with a situation where European and Asian and American countries continue to more easily dump their goods, and it is dumping because multinationals like to talk about, well, Africa isn't competitive. Well, agriculturally, Europe isn't competitive either. They just spend $1 billion a day subsidizing their agricultural sector. So I think we need to take a step back and be realistic and make decisions based first and foremost on creating prosperity. Now, I do think that it is important for a country like Nigeria to step in because we have smaller neighboring countries, and I think they should be able to trade with Nigeria. They should be able to benefit from our market. The industry I'm in, we build infrastructure and free zones for industry. I also think for a country like Nigeria, if we build, like right now, we have one of the largest shipyards in West Africa, in Ladol, where I work. So we're promoting West African local content. So I would like the West African countries to use my shipyard, and it makes sense for them to do that because they may not want to spend, $300 million building their own shipyard, and you can kind of create local content within our regions, but enabling us to trade freely with each other needs to be tempered by the risk that will lead to our markets not developing local content because we're opening ourselves up to this kind of dumping.
Okay, thank you. That's throwing the cat among the pigeons. Mary Jean, let me not. I'm not going to sort of want to pigeonhole the World Bank and the IFC as the sort of standard bearers of free trade. Perhaps I can do that for The Economist. But what's your response when you hear a leading business person from Nigeria saying, actually, we want more closed markets and we're a bit worried about free trade?
Well, it depends. I mean, how far do you take closed markets? Is it closed to Nigeria? Is it closed to the region? I mean, how far do we want to take that? I mean, I agree with Amy that it's good to build, local industry, local content, but it needs to be competitive. And competitiveness, where do you take that to? Is competitiveness within the region, and it could be competitiveness globally. Now, if we're talking about regional integration, we need to look at competitiveness regionally. And that doesn't necessarily mean having protectionism by country or by state. I think there's got to be a certain level of liberalism so that even with our local industries, we know that they're able to compete on the global stage as well.
So if I'm understanding you correctly, and tell me if I'm wrong, and I'll come back to you in a second, Gagan, but are you saying kind of more support for businesses to help them become globally competitive rather than giving them barriers that shelter them? Is that?
Absolutely. Absolutely.
And what are the examples of that? Let's just briefly talk about how can either governments or investors such as the IFC and the bank do that?
Jonathan, I'll intervene now. So I think probably what I'll do is I'll share with you a live example rather than just talking hypothetically. So 2010, Gabon used to export only raw timber. And we said, okay, and we are a multinational. We said, okay, what can we do with the Gabon government to really say that they are able to export these products as finished products? And which are the markets? Markets are not India or China. Market is Senegal, market is Nigeria, market is Ghana, because that is where you have more and more youth, which is where they are marrying, they are buying houses, and they want furniture, they want plywood, they want veneer. We said, okay, we'll look at focusing and exporting to these markets. And we set up an economic zone. But when we set up the economic zone, we said, ultimately for players to supply to these markets, whom are they going to compete with? They are going to compete with China and India. Because Senegal government is not going to say, I am going to raise cost of living for my citizens for Gabon to be prosperous. They are going to say, I am going to get my citizens to be prosperous by buying wherever they can buy most effectively by paying equal custom duties. Because they are not going to, Ghana government is not going to say, I will now charge less custom duty for Gabon, more for China, and make my cost of living high. So we said we have to ultimately look at Gabon industry competing with India and China. And these are not our companies, these are companies which are, SMEs which are established. What happened? We are in 2018, Gabon has become the second largest producer in the world of veneer in less than 6 years. Simply because we focused on making the industry competitive, which meant right from how do you make their raw material, their human capital, in terms of getting the inputs right, which now ensures that they're able to compete with China and India. So I think it's not a question about tariff barriers, it's really about making industry competitive and making it at scale. So a lot of times, every government wants to do everything. So, every country wants to have a refinery for oil, 2.5 million, 3.5 million tons. But look at global scale. You have refineries at 60 million tons. And these 3.5 million tons refinery cannot compete at global scale. Therefore, what will happen? A small country which is not producing oil will import because that's more effective for them. So we have to look at, when we look at trade regionally also, it has to be maybe an approach where you really choose each country what it can really do the best, most competitively, and therefore supply to everybody. So it's not just about, I think she rightly pointed out, it's about making the industry competitive for long term. Otherwise, you're just paying from one pocket to another pocket for some time, and it is not sustainable for long periods of time.
But can I just jump in there? I think you raise a valid point about the product and making it competitive, but I think we also need to look at how easy, if we're looking at regional trade in Africa, how easy is it to export to another African country, as opposed to exporting internationally or globally. So we also need to remove those barriers, make sure that we have open borders for people and goods within the region so that we're able to sustain that in inter-Africa trade.
So I completely agree with you. There's no doubt. And that is the reason when we started the economic zone, the first thing we said, we are not able to make this product go out competitively outside. And we ended up building a port because of that. So we actually started building an economic zone But we also end up building a port simply because what you said, we realized that they couldn't export properly without a competitive port and competitive logistics. So I think very important, the infrastructure piece of it, which is really logistics. And I'm literally taking back further more detail if I want to share with you. For example, we said for the industry to be competitive, we need glue. And glue, you need to manufacture methanol. And we said, okay, methanol cannot come. You need to build methanol storage tank for it to come competitively. So you have to really invest in the entire value chain for it to be competitive. Completely agree with you on that.
Go ahead. I agree that that's what we've done at Ladol. And I think, even though you don't realize it, you're agreeing with me. What Olam did, which is really unusual and which I applaud, is you invested in the local market. And you were able to be competitive internationally because you invested in increasing the level of local content on the ground. And the beautiful thing about local content is when you make the right investments, and obviously we're starting from ground zero. So right now, making the right investments means you have to invest in the whole value chain. I mean, at Ladol, we've basically built an industrial village. So I'm not saying it's easy. There are lots of challenges to overcome, but that's also why the early movers get most of the profit. So there is a lot to be gained by investing in the local market, because if you do the correct investment, you will end up with a highly competitive product, because everywhere in the world where local content has succeeded, it has always consistently lowered costs. So we're saying the same thing, and what the problem, though, is most companies aren't like Olam. Most companies don't invest locally. Most companies look at this free trade zone not as an EU, where the countries within are trading with each other. Most countries look at the first point you made and said, well, there's nothing in Africa. Let's get them to lower all their barriers so we can sell them stuff.
So, Amy, I'm just going to push you for a second on that, which is, and again, not picking on you or Nigeria, but it is a good example, because even if sort of abstractly, and I'm not going to pretend that I'm kind of, reading the economic literature on, kind of trade policy and kind of industrialization policy these days, but, even if one accepts the argument that says, industrial policy is coming back into fashion, and maybe an element of that is tariff protection, Nigeria's experience over 20 years kind of says, yes, you've created some great industrialists, but you've also created, a stupendous opportunity for connected elites to just rob the country. And how does one avoid that kind of problem?
Actually, I don't think we've created industrialists. I think what the problem we have in Nigeria is that our private sector, the real private sector is private sector that adds value, is tiny. Most of our private sector is government, and most of our market is government. I'm talking 95%. The bond market, the stock market, that's a huge problem. One of the best things this government has done is start to take government out of business. So they've actually started to create space where real industries can grow. And, as I said before, where this has happened, you're able to show tremendous value quite quickly, because we have a local market that's big enough to incentivize private sector to make those investments.
If Aliko Dangote were on this panel, or at least some other people, a lot of them would say, kind of, yes, Nigerians paid, more money for cement for 20 years than anyone else in the world, but it is now self-sufficient and has created this kind of big I mean, on balance, was that a trade-off worth making?
I don't think it was a conscious trade-off. I'm not sure it was a trade-off at all. What I would say is we've got to look at where we are now and where we're going. And cement, sugar, flour, these industries are now deliberately being made competitive by our government. This is the first government, again, I don't represent the government or whatever, and I don't agree with everything they've done, but a really good thing they did was outlaw monopolies. They put out a directive that said monopolies actually cause economic sabotage, and that's enormously important, and not just for Nigeria. Every person I speak to who has a private free zone in Africa, in South America, in Asia, we all have this problem when we come from low-income, high-growth countries of monopolies that have stopped the market from growing. And I think Nigeria is now moving into a real phase of industrialization because we're allowing the private sector to thrive.
Yeah, Mary Jean, I'm going to come back to you because part of your brief is investing in sort of agriculture, but also agricultural processing and manufacturing and industry. And to what extent are you starting to see those opportunities opening up, not just broadly across the region?
So I'm definitely starting to see a lot of those opportunities opening up. In the agribusiness sector, for example, Africa has the largest resources when it comes to land, when it comes to water. However, we are not using it as efficiently as we could. However, we're now starting to see opportunities across the whole agribusiness value chain from farm to fork, looking at fertilizer inputs. So we're making investments in entities that are manufacturing fertilizer, looking at agricultural cash crops, looking at how can we add value to those cash crops in terms of additional processing and investing in those processing units. And then also looking at storage and warehousing so that there aren't any market losses along the value chain. So those are the investment opportunities we're starting to see, and also the basis of manufacturing and industrialization as we get into manufacturing and as we get into processing and adding value. So instead of exporting raw tomatoes, processing them into tomato puree and then exporting the final product. And I think that's the way we need to go, supporting local industries. Now, if we're to have a Pan-African focus, I think we should also be focusing on supporting regional investors, sponsors or entrepreneurs in the region who've done well in their own countries and are looking to expand into other countries their businesses. And we see quite a bit of that. For example, significant sponsors in Kenya who are now looking to invest in Madagascar, and we are supporting them in that process by providing expansion capital.
So one of the themes that's just come out in this discussion, and both Gagan and Amy have mentioned this, which is that in some ways investors are having to, because they're being kind of pioneering industries, they've got to go in with the whole value chain. And we had the great example from Gagan, but also of the shipyard. And I just wonder, are DFIs like yourself set up to sort of say, we're not just looking for a kind of individual investable opportunity. Here is a company doing like warehousing or poultry food. But are you guys set up to say, actually, someone needs to look at the entire, poultry value chain from kind of, baby chicks to feed to eggs to whatever else goes into a poultry value chain? How able are you to look at that kind of entire setup?
So absolutely, I can speak for IFC. That's something we definitely look at. So it's beyond just the investment. We look at what is our role in the sector. So the example you gave of the poultry sector, looking at that in Zambia, actually starting from the feed, because that's your starting point, the feed, the eggs, the poultry, then the market, what's out there. Another example where we've looked at the whole sectors in Madagascar, the beef sector, where we realize that, yes, Madagascar's got good beef, but if they're to export it, what's needed? The veterinary services in the country weren't that great. So in terms of certification, phytosanitary checks and all of that, they weren't adequate. So we worked with the World Bank, who worked with the government to strengthen the veterinary services. So this is a sector-wide intervention, which would then enable not just our client to export, but other players within the beef industry. And I think this goes to the point that Jingdong mentioned earlier on with regards to our whole thought process around market creation, working more upstream before we actually do the final investment.
And I'm going to throw a question to the panel, and I'm going to come to the floor in a minute, but let me just throw in a grenade here, which is that we started this whole discussion saying, kind of intra-African trade quite low, with the assumption that kind of, it just needs to be better. And that, that we automatically assume that's a good thing. Is that really a priority? Should we be prioritizing getting, Congo and DRC trading a bit more with each other? Or where there are limited resources and limited investments, should we be saying, Madagascar, let's export beef to wherever the big beef market may be, and that could be Saudi Arabia right now. What is the priority? Where in this ranking does intra-African trade fit? Gagan, I'm going to ask you because you're
I think there's no magic pill to it. There's no magic bullet. Probably you need to do 2-3 things. First is really, as I said, choose the right value addition, the right product, and build the capacity to do that. I think secondly is really remove the barriers in terms of infrastructure around it so that it can actually move freely and without any issues. And thirdly, have the right capital, both human and financial, to develop the above two. So those three things will actually make the intra-Africa trade work.
Yeah. Amy.
I think regional and Pan-African integration are really important because to tackle issues that range from collective bargaining. So if you are a small African country negotiating with an oil company or a large agricultural company, it's easier if you have some sort of regional agreement or a regional body that's doing that negotiating, because it has a significant impact on our local outcomes. So having an AU that follows the model of the EU, I think is very important, but trade per se may not be the most important aspect of that relationship.
And Mary Jane, do you want to add anything to that, or should we just go straight?
I mean, the only thing I'd go back to is what I said in the beginning in terms of if inter-African regional trade is going to succeed, it's not just about the private sector. We also need to bring governments along with us as well.
Great. Do I see any questions in hands? And I hate to say I'm probably the world's most short-sighted moderator, so wave them vigorously, don't be shy. But I see a hand right at the back, and are there roving mics that can go right to the back, please? So whoever's got a microphone to the back left corner from where I'm looking. And if you wouldn't mind standing up and just introducing yourself, please.
Hi, my name is Franklin Amo. I'm in private equity in Africa as well. Yeah, I just had a question that came off the back of Amy, Dr. Jadesimi's comments, because I quite agree with her stance on infant industry development thesis. My question is, how do you finance that scale, though, right? Because the problem with that is that you're going to have years and years of losses, and I know the prior IFC panel talked about banks and how they were mismatched, but in Asia, those banks are mostly private, and the state effectively financed those losses until you caught up to the point where you were using all of that capacity to really benefit from scale. So my question is about the financing of that. Thank you.
Great. Yeah, thanks, Amy.
So there's no easy way to do it. Ladol's been going since 2001. I think it took us over 10 years to make our first profit. There's no shortcut. So but the good news, so you do have to have investors who are ready to sit there for a long time and make it work, particularly when you consider the fact that the solutions and the industrialization of Africa is going to be radically different from anything else we've seen. Like, one thing that maybe hasn't come out as clearly today is that the future of Africa is going to be driven by disruptors. So, you can't take the status quo and project it, forward. It's going to be things we haven't heard of, and there's going to be a lot of trial and failure. But there are two good things for that. One is there is actually a lot of local capital that's available. It just needs to be deployed in the right way. Now, this is truer of Nigeria than other countries, but certainly in Nigeria, we have enough capital, if we deploy it correctly, to fund our own growth to a point where it makes sense for international investors to come in. The second thing is the prospects for African investment are tremendous. Like, when we talk about the potential of Africa, that's a real thing. So as an investor, you're not being asked to invest in an idea. And we were talking about this earlier, like Facebook was an idea. When Facebook started, or even Apple started, you had a guy who wanted to do things radically different to the status quo, which was Microsoft, but he managed to get funding. You talk to people as an African investor, and if you're the Steve Jobs of Africa, they'll be telling you to be like Microsoft. They'll basically kill your business. So you need to have an understanding, first off, that you've got to invest in companies that are doing things radically differently, but the market in Africa is established. So you're not investing in an idea, you're investing in an industry that's established, and you're saying, people need this much wood per year. If I produce the wood locally, I can halve the cost, so I should produce the wood locally. The same thing with, milk, rice, in my case, servicing the oil and gas industry. There are lots of untapped, quantifiable markets where you could invest and significantly add value today.
Mary Jane, I'm going to bring you in on this one as well, because...
Well, I think to what Amy was saying, I think we should also give room for disruptors in Africa. I think there's room for that. I think maybe the likes of IFC, except we do have a small window, VC window, where we can invest in those disruptors. But I don't think we should only be focusing on projects that are investment ready. We need to go 1 or 2 levels down to support those potential disruptors, and that's what we need, because that will enable us to leapfrog some of the lessons learned that other countries have been through.
Great. Any other questions? Let's get some hands, some questions, comments from the audience. Is everyone awake? I mean, I can, I've got plenty of questions of my own, but this is your panel as well. So do I see another hand here? Okay, we've got a hand at the back there. Could we have the mic? And in fact, if there are any other questions, I can take 2 or 3 at the same time, if that makes it a bit easier. So, please.
Yeah, hi, my name is Sami Ngele from LBS. Just on that last point, is there any examples of disruptors in Africa that people should be looking at? Who are these companies that could really change the game?
That is a great question. I'm actually going to throw that open to the entire panel. So what disruptors are you all seeing? Let's start here. Go ahead.
I think I'll also a little bit add to the financing part. So, what we did actually, if you look at it, is disruption. So if you would have asked anybody in 2011, in Gabon, can Gabon be exporting furniture? So I still remember the main newspaper carried the article, White Elephant, It's Another Dream. And when I used to go and meet everybody, they used to say, your guys have gone nuts. Not possible Gabon can export furniture. And so it was actually a disruption for the old established players, saying that how can Gabon actually produce furniture? Impossible. That was a complete disruption. And in terms of financing to that, I think a lot of African banks are willing to finance. It's not that they're not willing to finance. A lot of regional development banks are willing to finance. So in our case, it was AfriExim, BDRC. I mean, all African regional banks were willing to finance. So enough capital is available for African projects. It's not that it's not available. I think, and you rightly pointed out, a lot of disruption is going to come. And what we are doing with our smallholders. So we work with smallholders. Most of the oil-rich nations, right from cassava, banana, manioc, take the name of the product they import. And good example, if you go to Gabon, I'm sure Nigeria as well, they used to import everything from Cameroon, right from cassava to banana, pineapple, chilies, take the name of the product. Next year, they will not be, this year, 2018, they'll not be importing any cassava, any pineapple, any manioc. Simply because we work with smallholders in a very disruptive model. What is the disruptive model? We said it's not about just technical know-how. There's no market access. Nobody's able to pick the produce up. So we put up a model whereby all these farmers are tagged, geo-tagged to us. They actually send a message to us when the produce is ready, and the person goes and picks up the produce from them. So it's nothing but a very small innovation which has really helped disrupting the entire way that the product was being imported. And this we are testing in a big way right now in Indonesia, where we have over 100,000 farmers which are actually supplying just basis when the product is ready. And I think to the point which you were saying earlier on the infrastructure, I believe the biggest disruption in Africa will come in terms of infrastructure itself. Like everybody says that Africa went from without having phones directly to mobile phones, no fixed lines. I think Africa will go through something similar on the road network also. You probably will actually see more things being lifted by drones than really building roads. So that is the kind of disruption you'll keep seeing in times to come.
And I'm just going to push you on that, because it's a fascinating question for me. I mean, we've seen drones delivering blood supplies in Rwanda. It's going to be rolled out to Tanzania, but that's like a little, kind of little bag of blood, half a kilogram. I mean, you're in bulk logistics. I mean, you guys are shipping tons of cashews, and I mean, are drones going to be able to go into the jungle and pick up cashews?
I think it's good that most of you are laughing, but I can tell you one thing. There's a company in China which actually is testing currently for lifting more than 2 tons. Actually, and DHL has signed contracts with them for delivery over 100 such drones. In my personal capacity, I'm invested in that company. I cannot name that company. But
go on.
I can tell you that we are trying to bring them to Africa before end of this year to do some trials in 2 countries in Africa to actually lift over 0.5 ton of product. Wow. So it's not a dream. It's going to happen. It's a question of time. I think a lot of things, and if you were to roll back the history 300 years back, most of the people died of what? Most of the people died of famine because there was no place to store food, or they died of plague. If at that point, if today somebody says people are dying of famine, we will not believe. 1/3 of the population of France was wiped out because of famine. You had Spanish population over 40% wiped out because of plague. But today people think, no, it's not possible that people will die of famine or plague. And similarly, such innovation will happen in such a short period of time, even before we realize it is cropped up. So I'm sure it'll happen much faster than we believe.
It's great to hear such positive views. Mary Jean, where do you see the big disruption?
Okay, so I think there's been a lot of discussion around human capital, and as much as we talk about regional trade, integration, the drivers behind that is human capital, skills, etc. And I think an example which I think was pretty disruptive in the education space is bridge academies, where they provide education to low-income segments of the population, but using technology. So instead of, the teacher having a work plan book, I used to be a teacher once upon a time, so I know having a work plan book, etc., it's all delivered through handheld devices, and the lessons are delivered through that handheld device, and that's what the teacher uses. But this helps them to deliver education at a very reasonable low cost to a large segment of the economy. Now that has been disrupted because typically governments feel, and these are teachers taken from the community who are then trained to deliver this education. And governments are not comfortable with that because they say, well, they didn't go to teacher training college. The structures that are used are not your normal classrooms, etc. But the results that the students have produced in the last 2 years have been absolutely phenomenal. Now, if they were able to deliver that in Kenya, Uganda, Sierra Leone with the buy-in of governments, that in itself is regional integration on the education side. And that's what I think is quite disruptive and necessary for us to ensure education is delivered for all.
And correct me if I'm wrong, but the IFC's sort of put its money where your mouth is, hasn't it? Your investors in Bridge.
We have, yeah.
Amy, you introduced disruption, so tell us where you think the big disruption's coming.
I'll give two examples. One is the company I work for, Ladol. So we service the oil and gas industry. And obviously oil and gas has a bad rap when it comes to sustainability. But oil and gas companies invest more than anybody else. They make long-term investments. They believe in innovation. And those are three of the factors you need for sustainability to work. So what we managed to do is halve the cost for oil and gas companies operating in Nigeria. And we did that basically by increasing the local content and then some other innovations. But when you do that, you significantly increase the attractiveness for them to make long-term investments of the kind that led to Norway becoming, the engineering capital of the world for the oil and gas industry. So disrupting something like the oil and gas industry has exponential benefits. The other example I'll give is a company called Mkudi. So I recently joined the B Team Africa, and the MD is one of the other members, and Mkudi, I'm sure you know from Kenya. So this is a company that essentially makes solar-powered generators that can be used at the SME, at the local level. And so this idea of leapfrogging and multimodal transportation and disrupting the energy network so that we can empower people through the use of solar technology, for example, to be able to power their businesses, I think is really critical at the ground level.
I'm going to try and restrain myself because I've got an immediate follow-up question. But if there is one last question from the floor, this is your chance. Okay, we have a hand over here. Actually, we have two. There we go. Now there's a rush. Three. Okay, sorry. So one in the front, please.
Thank you. Still on human capital, Gagan, what have you done in Gabon in terms of not only utilizing the local labor, in terms of training them so they become integrated Africa useful for the whole continent?
Okay, let's take so human capital. We've got on ice. Question down the middle. There was sort of 2, 3, and then one right at the back. So could we have the other hands up, please, if you still have your questions?
All right, so I'll just ask my question now. My name is Daria. I work as a strategy manager in Shell, and I was just wondering in terms of inter-regional trade, how much of you guys reached across and look at different opportunities within the different regions? So you talked about the special zone in Gabon. I know Lado talked about what she's doing.
Great. Okay, so sorry, we lost the mic cut out, but if I just nod vigorously if I've got this correct, but the question was how much are these guys talking the talk? Yeah. Is that walking the walk, I should say. Yeah. Okay, then there was another hand somewhere in the middle here.
Hi.
Okay.
My name's Kwame Biko. I'm working for General Electric. I'm based in Ghana, but recently moved to Dubai because really travel in the continent was just difficult. And just to give an example, I was in Nigeria and needed to get to Niamey in Niger, which, neighboring countries, people who speak the same language. The easiest way to travel between the two was through Paris with Air France. And that was also the quickest way. So before we talk about regional integration, I mean, how do we address travel?
Great. And I'm going to, yeah. And I think there was one last question, and I'm afraid, there we go, thank you.
Hello, my name's Soybe on behalf of Schultz Healthcare Limited. I'm conscious of two themes that have come out. First is human capital in the continent, and also disruption, and I kind of link that to technology and automation, as I see as a trend heading on automation in the future. I'm just interested to hear your thoughts on how those two trends combine, because obviously the workforce of Africa is immense, and combined with that automation, drones, whatever it may be, the reduction of manpower.
Great. Okay, so I'm going to cut off the questions there. I'm terribly sorry to say, but there are the quick and the silent here, and the early hands got it. So let's human capital, disruption, and travel, and let's fire away.
So I think the biggest disruption that is happening globally is not about, the transport or about technology. I think the biggest disruption that is happening is the world has given the power of any individual sitting anywhere in the world to disrupt any industry. So gone are the days that you needed $1 billion of capital to come and do something. I think that's the biggest disruption, that's the biggest advantage for Africa. Today, anybody sitting in Africa can decide to do anything that somebody sitting in US can be doing, which was not the case 20 years back or 10 years back. You needed amounts of capital, there were so many barriers. I think the biggest disruption that is actually happening is that allows us to do anything that we want to do. That's the biggest disruption happening. In terms of human capital, that the question you asked, I think what we have been actively doing is really ensuring that the local talent really leads from the front. So, which is, investing from education, in schools, to more importantly giving them the freedom to do. So a lot of, in our company, what we do is really allow the people to fail, allow the people to experiment. That gives them the practical training to succeed. And we are really happy today. Most of our businesses are actually, led by national managers, and some of them actually gone to lead other countries. And that's not just sending them schools, but really allowing them the practical experience to lead these businesses. That has really been working for us. So when today we employ about 17,000 people in that country. 5 years back, out of the 17,000 people, we had about 3,000 expatriates. Today, we are down to less than 200 in a journey of less than 5 years. And that's really about training, giving people on-the-ground experience.
Mary Jean, do you want to pick up on the sort of transport and kind of connectivity piece?
So I feel your pain, right? Absolutely. I think travel in Africa is a nightmare. Prior to me, taking on this role in Africa, I was covering Latin America, and it was a breeze to travel from country to country. So I'm based in Nairobi. For me to get from Nairobi to Dakar, it takes 9 hours, with stops in Abidjan and Bamako. When I was in Ghana and I was covering Niger, it took the whole day, and I had to go from Accra to Lome, Abidjan, Ouagadougou, Niamey. 8 p.m., that's when I arrived. So we do have a couple of airlines on the continent, Kenya Airways, South African Airways, Ethiopian, where they've tried to build a good network, but it's not enough. The pricing is horrendous. It's actually cheaper to fly to Dakar from Nairobi on Emirates than it is on Kenya Airways. So I think that's a perennial question. I don't know if we can solve it here. It would have been good to have the CEO of Ethiopian Airlines here on the panel to help us address that. But I mean, what do we do? I mean, as IFC World Bank Group, do we invest more in airlines? Do we allow more airlines to come in, or should there be a consolidation of the airlines we have on the continent? How can we ensure efficiency, reasonable pricing, and safety as well? Because that's also something we have to deal with. Great. And then I'd like to quickly answer the question on automation.
Yes.
So I think the gentleman, if I understand you correctly, you're saying that now with automation, that could probably result in less jobs being created. And that could be a concern as well for governments that they try and build jobs within their continent. So I'll give you an example of something that we went through as IFC. Last year, we made an investment in BMW in South Africa. And I'm sure a lot of you are saying, but why BMW, etc. And in fact, because they were automating their plant, it didn't necessarily mean that additional jobs would be created. But what was important for us was the supply chain. The supply chain that was providing the parts to BMW and supporting that supply chain by upskilling them, making sure that they are able to manufacture parts at the right quality, and not only for BMW, but for all the other OEMs operating in South Africa.
We're about to break for tea, but I'm going to take 1 more minute of your time, 1 minute and 30, and I'm going to give each person 30 seconds, and I'm going to ask them, and Gagan, I blame you for this, because when you said you're investing in something that you can't tell us what, I'm going to say to you, if I gave you $1 million each today, in 30 seconds, and there are 2 rules. You've got to invest it in something that's not your company, and you've got to invest it in something that is going to benefit from intra-African trade. What kind of sector or business would you put it into? And I'm starting with you, Amy.
I would actually probably put it into microfinance. And you'd probably have to spend half that money figuring out how to make microfinance work, and then the other half lending to people. But I think that, and sorry, I don't want to digress from your point, but just to link that to the person who asked about the difficulty of traveling inside Africa. As an entrepreneur, that's music to my ears. You know why? Because all of you here at business school, you're looking for business opportunities. There are lots of historical reasons why we don't have good inter-African connections, but you guys are going to solve that problem. So it's a question of which one of you is going to come up with the business model, and how is IFC going to fund that business model? That's the solution.
Very good. Yeah.
But yeah. So I would, so if I had spare money, I would invest in African companies.
Great, Mary Jean, and remember, this is your money, not the IFC's.
So if it was my money, and I'm always being told to regard the IFC money as my money, so I would invest in agriculture, because I think that's the foundation of what we need to do here in Africa. It's the foundation of industry, of manufacturing, and the regional intertrade that we're talking about. So, and combine that with microfinance, because that's needed for the smallholders if we're going to support smallholders in the sector. Yeah.
Gagan?
So I'll take more than 30 seconds. So if actually, if you are interested, you should actually go to a website called xprize.com, and I've sponsored this prize this year to find a solution. How do we lift 40 million people out of poverty? So that is in Africa, in farming. So that's where I'm putting my money is. How do we do a game changer in terms of lifting people out of poverty in agriculture, about 40 million people. And we believe that's by just connecting the farmer directly to the customer.
Great. Okay, so you've got great calls to action, all of you guys. You know what to do. You know who to talk to. I've got to say, I've moderated similar themed panels like this in the past few years, quite a few times. This has been one of the most exciting and most interesting. I've come away learning a lot. So thank you.